Okay, we'll start the class now. Today, just like I told you in my last class with you, that we're going to be looking at capital allowance today, and we hope to take you to a very, at least to a very large extent, today we will do a lot of things that I believe that needs to be taught on this capital allowance. You remember when we're doing our concept of adjusted profits, you remember I told you depreciation is not aligned with depreciation. Why did we say that? One of the times we said that was the fact that an asset will be depreciated by company's policy. There is no standard, no specific standard as regards the depreciation rates, no standard guides can you see my board?
Yes, I can see.
I said, imagine a company acquires an asset for 10K, company A and company B acquire an asset for 10K, and the depreciation rate for the two assets is 10%. But company A had decided to use straight line method, while company B had decided to use reducing balance method. For straight line method, assets are depreciated on cost price. For reducing balance method, assets are depreciated on net book value. Right? So if we begin in year one, I would have said company A will be paying or will be depreciating the assets for 1K, same as company B. You remember your book value is costs plus accumulated depreciation. In year two, my guy that is depreciating on cost will still have the costs, but this guy that is depreciating on book value will have 900. In year three, this guy will still be 1K, and this guy will be 810, and going forward. What does depreciation bring into play? Depreciation brings what we call inconsistency. Look at that. Company A and company B that are acquired the same asset on the same date and put them into production use at the same date are charging different amount of depreciation. By implication, it means you will not be able to compare these two taxpayers under the same circumstances, because this taxpayer had been using the accounting standard. And in accounting standard, you do not have restriction to the rate of depreciation to use. There is no restriction to the methods to use. You can decide to use any method, provided your company policy says so. Provided your company policy says so. Now, I will say this. It means there is a problem. Am I communicating?
Yes, sir.
It means there is a problem. There is a problem in our computation. As a taxpayer, will continue to do whatever they want if there is no regulation that will guide them. Therefore, the tax authority believes that to be consistency is the best. To have a consistency method, consistent method of approach to computing depreciation is the best. Meanwhile, the financial reporting standard does not believe that. So we begin to have different dimensions as to how to apply this. Therefore, we now say, okay, if that is the case, depreciation depreciation will not be an allowable deduction. Why? Because it has various methods of various methods in which the taxpayer can use. It also has various rates in which the taxpayers can use. Various methods and various rates in which the taxpayers can use, which does not make sense as far as we are concerned. Therefore, depreciation will not be an reliable deduction. So, what are the reasons for us introducing capital allowance? Reasons for introducing capital allowance. We said number one, to bring about consistency. Bring about consistency and to introduce standardized rates. Again, provided assets are acquired on the same day, the taxpayers shall be granted the same amount of capital allowance. Okay, so what are the reasons? Number one reason is this conjunction. What? Someone is asking the question. This is conjunction of what, please? Everything just cut out. Sorry about that. I am still under capital allowance. I'm discussing capital allowance. Sorry about that. So I said, what are the reasons for the introduction of capital allowance? I said capital allowance was introduced to bring about consistency. Okay? There was inconsistency before capital allowance was introduced. So capital allowance was actually introduced to bring about consistency in the act. That's number one. Number two, capital allowance was also introduced to ensure that taxpayer, provided they have acquired the same asset and put them into production use at the same date, charge the same amount of allowance. They are granted the same amount of allowance. That is the reason why capital allowance was introduced. And the next reason why capital allowance was introduced is to standardize the tax rates, the rates. Because for capital allowance, you should be able to work standardized rates. So that was one of the reasons for the introduction of capital allowance. And to bring about the same set of rules that will be applicable to all the taxpayers. Now, having said this, I begin to discuss with you what depreciation is. Depreciation is just the spread of the historical cost of the assets. Historical is historical costs of the assets over its estimated useful life. By implication, you are just spreading the cost of the assets over its estimated useful life, which by implication again does not involve movements of cash. If that is the case, we now say, again, depreciation is not allowed because it lacks consistency. It does not give the taxpayer the same platform. You cannot compare taxpayer, and the same set of rules does not apply to all the taxpayers. So, capital allowance was introduced. What is capital allowance? Capital allowance. Capital allowance is the allowance granted in lieu of depreciation. Capital allowance granted in lieu of depreciation. That is, instead of allowing depreciation in your income statement, capital allowance was introduced. Now, if that is the case, what is capital allowance? Capital allowance, I want to follow me, is an allowance granted to a taxpayer that has incurred qualifying capital expenditure and puts same to use during the basis period, within the basis period. So I said capital allowance is the allowance granted to a taxpayer that has acquired qualifying capital expenditure and put same into production use and put same into production use within and at the end of the basis period. Okay, so when you look at what we have said here, I want to bring out some key points. I said capital allowance granted to a taxpayer that has incurred qualifying capital expenditure. Now, I'm trying to link it to conditions for granting capital allowance. So conditions for granting capital allowance. Number one, expenditure must be incurred. Expenditure must be incurred. So if you look at my definition, I said capital allowance is allowance granted to a taxpayer that has incurred what? That has incurred. That is the expenditure part. Qualifying capital expenditure. Okay. Number two, the person making the claim must be the owner of the QC. Ownership must not be in doubt. There was a question one of you asked me, was it you or in my physical class, that if there is a dispute over ownership of the land, who claims capital allowance? And my response to the person is that before you can claim capital allowance, the ownership must not be in doubt. The beneficial ownership must not be in doubt. So we must know the person that owns the assets before capital allowance can be granted. Okay? That's that. Number next. Usage. The QC must be used for the purpose of generating taxable income. Okay, so when you look at my definition, I said capital allowance granted to a taxpayer that has incurred qualifying capital expenditure and put same into production what? Use. That is the usage we are talking about, production use. Period of usage. The assets or QC must be used throughout the relevant basis period. It must be used throughout the basis period. You must continue to use it to claim capital allowance of the assets. Number next. The taxpayer must also apply for the taxpayer to qualify to claim the capital allowance. And the last one is that where the value of the QC is greater than 500K, the taxpayer must obtain an acceptance certificate from the Ministry of Trade and Investments. So those are the conditions for you to claim capital allowance. Now, if you understand that, we now move to the next one. What is qualifying capital expenditure? Qualifying capital expenditure is the same as your fixed assets, which is categorized according to the tax law. Okay, so not all the assets will qualify for capital allowance. Not all the assets of the company will qualify for capital allowance. For example, an asset that has unlimited useful life will not qualify for capital allowance. Who can give me an example of that? Who can give me an example of that?
Land.
Thank you, my brother.
Building.
Building as, according to the act, as
Limited life.
Yes.
Okay.
But land does not have limited life. Because someone can come now, that your building that you're talking about, demolish it. But the land will still be there, isn't it? Are you following?
Yes, sir.
Yes, sir.
Good. I'm seeing some new faces in this class. Emmanuel, Shubain, you are new. Good morning.
Good morning, sir.
You are welcome.
Thank you.
Augusta, Elechi, Emechi, you are new. Good morning.
I'm not new, sir. Good morning, sir. I just updated my name, changed my name.
You change your name. You cannot be changing your name. You know, I'm not seeing you.
Not
I'm
really.
not seeing.
I didn't change my name. I just added capital this thing letter, the first letters. I
Okay.
didn't really change the name. Yes. Thank you, sir.
Okay. Because I know my student. Inú mi dùn. Fèyí ṣetán.
Sir, I'm
Yeah.
not new too.
You see yourself.
I've attended all your.
You see yourself. I don't know you. You guys have not been talking in the class.
Sir,
Aisha
I
Ayola.
that question that you were referring to about distribution of land.
Okay. Now I'm happy. Aisha Ayola. Are you new?
Good morning.
Good morning. See fine voice. Oh, yeah.
Yeah, you could say I'm new. I've not been attending classes for a while.
Okay. You're
Thank
welcome
you.
back.
Thank you, sir.
Yeah. Okay. Okay. I think I'm cool with these other names. Oluwadifemi, I greet you specially. Okay, let's go ahead. Oluwadifemi, greet class. Greet the class.
But you have never greeted me before.
But I greet you specially today.
Good morning, sir. You greeting me?
Greeting from your side. You know, I always see your glasses from afar. So I know you're always in the class. All right then.
Thank you.
Let's go ahead. So as I was saying, I said some assets will not be qualified for capital allowance purpose. And one of the assets that will not be qualified for capital allowance purpose is because it has a limitless life, unlimited useful life. And the asset that has an unlimited useful life, for example, in this case, is land. Land has unlimited life, so it will not qualify for capital allowance. The next one, there are some assets, even though they are categorized as assets, but we can actually expense them based on their value and based on their nature. For example, when you have stapler, for example, when you look at the criteria of fixed assets, it will meet the criteria of fixed assets, isn't it? What are the criteria for fixed assets? We said, number one, for an asset to be fixed asset, it's the useful life must be more than a fiscal year, isn't it? So some of you, ever since you joined your company, since Odun Baboro, you have been using the same stapler. Abi, will you now then say you want to categorize stapler as fixed assets? The answer is no, you cannot do that because of the nature of the assets and the value of the asset. So that will not be categorized as qualifying capital expenditure. Now, having said that, let's go. What are the categories of qualifying capital expenditure that we have? We have number one, industrial building and non-industrial building. Number two, plants. So when we say industrial building, we mean industrial building and non-industrial building qualifying capital expenditure. We also have, so when you say industrial building are factories, workshop, or building of or structure used in connection of such building. So when you talk about industrial building, we are talking about the factory, mills, or mechanical workshop. Okay, so that's what we call industrial building. For the purpose of industrial building, we say industrial building could also mean dock, port, wharf, jetty, or other similar structure. But no examiner will be asking you to define what industrial building is. So I'm just explaining it. The next one is non-industrial building. Non-industrial building would include house built to accommodate staff, shops, offices, and maybe banking buildings. They are non-industrial building, okay? So, and they are also qualified for capital allowance. The next one is qualifying agricultural expenditure. Qualifying capital expenditure and cultural expenditure. These include agricultural trade, okay, including in this will be cash crops, all those expenditure incurred in doing that. The next one is mining expenditure, any expenditure you incurred in mining, acquisition of mining, or research and development of mines, then it is qualifying capital expenditure. There's another one that is research and development expenditure, licenses you acquired during that will be categorized as research and development expenditure. Any formula that you acquired, feasibility studies that you acquired, so such will be categorized as research and development expenditure. The next one is qualifying plantation expenditure. What are these? Expenditure you incur for the purpose of plantation. Okay, planting. What are the expenditure that is connected to this? You know, when you clear your land for the purpose of planting, then we say you have incurred qualifying plantation expenditure. We also have plant and machinery expenditure. Plant and machinery qualifying expenditure. This include the acquisition of plants and machinery, equipment for the purpose of the business. The next one is qualifying public transport expenditure. The next one is qualifying capital expenditure. QC incurred on development and acquisition of software and other outlay. This was introduced by 2019 Finance Act. So where a taxpayer incurred qualifying capital expenditure on software, such will be categorized as qualifying capital expenditure. Okay, what are the types of qualifying capital expenditure that we have? Types of capital allowance. Number one, we have the initial allowance. And we have the annual allowance. Now, I will take it one after the other. What is initial allowance? An initial allowance is the allowance. An initial allowance is the allowance granted to the taxpayer that has incurred qualifying capital expenditure once throughout the useful life of the QC. We said initial allowance granted is the allowance granted to the taxpayer that has incurred qualifying capital expenditure once once throughout the useful life of the asset. So by implication, it means that this allowance is only granted to the taxpayer once throughout the useful life of the asset. It is granted once throughout the useful life of the asset. Having said that, what are the characteristics of initial allowance? Number one, it is granted only in the first year of use of the QC. Number two, it is granted en bloc. When we say it is granted en bloc, that is in full. Number three, it is not prorated to the number of months in which the QC will be used within the basis period. So you do not prorate it as it is granted in full and is only granted in the first year of use of the assets. It is granted only in the first year of use of the assets. So how do you calculate initial allowance? So assume the cost of the assets is 500K and assume the plant, we have acquired plant and machinery. The examiner at the back of your question, would always give you the table at the back of your question. Look at me. So the examiner at the back of your question, can you see? Would always give you this table. I'm coming. Okay. Can you see? Can you see my table? So the examiner will always give you this table at the back of the question. So that shows, I don't know how big it is, that shows the initial allowance rates and also shows the annual allowance rates. So by implication, you do not need to cram the rates. The examiner will give you. Do you understand? The examiner.
Yes, sir.
Okay. So as I was saying, where's my notes? Oh, so you do not need to cram the rates because the examiner would actually give you the rates. So I said, let us assume we have acquired plant and machinery for 500K. So the initial allowance rate for plant and machinery is 50%. Annual allowance rate is 25%. The examiner will give. Don't bother yourself. So to calculate your initial allowance, you will just say 50% multiplied by 500K. What would you have? 250K. So that's your initial allowance rate. So this is the amount the tax will be granted in the first year of use. And this amount is only granted only in the first year of use. It will not be granted again. So it's only in the first year of use. So the next one is annual allowance. What is an annual allowance? An annual allowance is the allowance granted to the taxpayer throughout the useful life of the QC. It is granted to the taxpayer throughout the useful life of the QC. Okay? So if that is the case, how do we calculate annual allowance? But before we go to that, let's look at the characteristics. Number one, it is granted throughout the useful life of the QC. Number two, it is prorated to the number of months within the basis period. So this is prorated to the number of months in the base period, and at the same time, these assets, this qualifying capital expenditure will earn an annual allowance throughout the useful life of the assets, and it is on straight line method. Okay, if we now understand that, we quickly move to how do we calculate annual allowance? Your annual allowance is cost minus initial allowance divided by N. Let's go. What is IA? IA is initial allowance. What is N? N is number of useful life. How do you calculate your N? N is 100% divided by annual allowance rates. So if annual allowance rate is 25%, your N will be 100% over 25%, giving us 4 years. Giving us how many years? 4 years. Okay, let us also imagine that your annual allowance rates that your annual allowance rate is 20%. So how many years will the assets use?
5 years, sir. 5 years. 5.
What about if we have 10%?
10 years, sir. 10.
10 years. Good. Okay, now that means we now understand how to identify the number of years for an asset, which is very important for the purpose of this class. Now, I understood that. Sorry, guys. We now move to what about if we have an asset? We have an asset that does not have a full year. You have an asset, and that asset was acquired less than a year. For example, an asset was acquired in between the year, and especially when the company is just commencing operation. So to the extent that that asset will not be granted a full annual allowance, how do you calculate the annual allowance? So we say cost minus initial allowance divided by n multiplied by y over 12. This would only occur during commencement of business. So it doesn't happen frequently. It's only during commencement of trade you would see this kind of situation where you have to use this formula. Any question before we go ahead?
I have a question, sir.
Thank you. Go ahead.
Regarding this initial allowance and annual allowance, now is it the tax authority that will determine whether to grant initial allowance or annual allowance, or is it something that the companies themselves can do on their own?
Yes, you are entitled to both.
Okay.
You are entitled to both. After this diet, now all this confusion will go. Because in the new act, there is nothing like initial allowance again. It is only annual allowance. But for now, we'll still continue to teach it this way. So it is both the initial allowance and the annual allowance, and taxpayer are entitled to get.
Okay, but how will they know if they are entitled? Like,
If you have just acquired an asset, you calculate both initial allowance and annual allowance. But subsequently, it will now be annual allowance.
okay. Okay.
Do you understand?
Yes, sir, I do. Thank you.
Okay. All right. So, if that is the case, we'll move on to the next one. Now, for the purpose of capital allowance, you must retain 10 naira. So that means so as I was saying, sorry, a call came in. Now that we now understand this, I was saying that in the last year of use, you must retain a notional value or residual value, which is 10 naira. Why is this 10 naira retained? For us to be able to have a value to compare when disposing our assets. Okay, so when you want to dispose your assets now, that 1%, you'll be able to compare it with the tax linear value at disposal. Will be your tax linear value at disposal. You'll be able to compare with your sales value. So that's that. So if that is the case, you can move on to the next one. What is the treatment of assets acquired on second hand basis? When an asset is acquired on second hand basis, we have to look at it from two perspectives. Is it building or other assets? If it is building, no initial allowance will be granted. If it is building, no initial allowance will be granted. The annual allowance to be granted shall be lower of the original price of the assets and new purchase price. Note all these things I'm teaching you. Note them, they are very important. Will be the lower of the original price of the assets and the new purchase price. Okay, so that is that. This scenario is a scenario where the assets are not being used, had been used for the purpose of generating taxable income before. The next one. If it is other assets that was acquired on second-hand basis, no initial allowance should be granted. Annual allowance to be granted shall be on the tax written down value of the QC. Shall be on the tax written down value of the QC. So that is that. Let's look at an illustration.
Can you talk about these other assets again, please? I didn't get that point clearly. Just the last point you just said. No.
Shall be on the tax written down value. What is tax written down value? Tax written down value.
Yes, starting from the other assets.
I said no initial allowance will be granted. Annual allowance will be granted shall be on the tax written down value. So when I say tax written down value, it means costs minus initial allowance minus annual allowance in year one. Tax written down value in year two will be tax written down value in year one minus annual allowance in year two. Next, tax written down value in year three will be tax written down value in year two minus annual allowance 3. Tax written down value year 4 will be tax written down value year 2, year 3 minus annual allowance year 4. So I am now saying that when an asset is disposed, the tax written down value is very important because upon which we are going to calculate our annual allowance. When we get to the computation, you will see it clearly. Okay. let's look at an illustration. Assume, okay, let's say Tunde commenced business on 1/4/2021 and write this question down. Prepares it. We said, sorry about that. Tunde commenced business on 1/4/2020 and prepares each account. So 39/2020, 39 annually. 39 annually. The following assets were acquired. Serial number, QC, date of acquisition. Hope you're writing the question down.
Yes, sir.
Good. 1. Motor vehicle. Date of acquisition 1/2/2020. Amount 20 million. Next, equipment 1/10/2020. 30 million. Research and development 1/5/2021. 90 million. Building 1/9/2022. 100 million. Required. Compute the capital allowance. Let me know if you are done writing.
You are done writing, sir.
Is that same for everybody?
I'm done writing on my end.
Okay,
Yes.
good. All right, so let's compute our capital allowance. Now, before we compute our capital allowance, let's talk about, we'll come back to that, the basis period for capital allowance. Basis period for capital allowance. So the purpose of basis period for capital allowance is to allocate assets to the relevant year of assessment. Do you understand me? So the purpose for which we compute we have our basis period is for us to be able to ascertain the relevance here in which our capital allowance will be introduced for the purpose of our asset will be introduced for the purpose of capital allowance. So it's for us to identify the year or the relevance year in which our assets shall be introduced for the purpose of capital allowance. That is the purpose of capital allowance. Now, I've understood that. Another thing that you need to note is that any asset, you are noting that, or hope you are jotting down all this that I'm saying, not just to be sitting in class without writing. Any asset acquired prior to the date of commencement shall be deemed to have been acquired on the date of commencement. Okay? So if you acquire an asset on a day before the date of commencement, such assets will be deemed to have been acquired on the date of commencement. Okay, having understood that, we can now move. So when you have a question, the first thing you would need to do is to do your basis period for assets allocation. Mute your mic. Is to what? Mute your mic. Who is that? Is to do your basis period for what? For assets allocation. And if you are doing that, so I would need to determine my relevance here. In this question, examiner did not give us the relevance here. They just said, compute the capital allowance. So if examiner did not give you the relevance here, the last asset that was acquired by the company, it will stop there. So that means I might stop here. But let me just say for the first 5 years, go ahead and include it in your question for the first 5 years. I will know the relevance here. But how do I know? You remember, this is a commencement question. And I told you when a company commences operation, such a company will be assessed to tax from what date? Who is telling me? Emmanuel, don't say anything. I want to call names now. Some of you have not been talking in my class. Yes. If when a company commences operation, how do you assess the company to tax? If you don't want to talk, okay, continue. Zoom user. When a company commences operation, how do you assess them to tax? Guys, don't disappoint me. There are some new students in this class. They will think we have not taught you. Zoom user. Thank you, Zoom user. Zoom user has disappeared. Yo, Zoom user don't disappear. Sarat, help us out. I know you have been a regular student.
Sir?
When a company commences operation, how do you assess them the tax?
And the day they commence operation, no?
To what date? No,
To the dates they gave us.
to the date they give us.
To the day they prepare account.
To their first
From
account.
30 to their first account year. Yes.
Sure. Already from Kaduna. So from the date of commencement to what? Yeah, I did for you to my guy. So from the date of commencement, which is when they commence in this situation, they commenced 1/4, Abi, to the end of the company accounting year end. So, favor, when would this be assessed with tax? What's the relevant tax here? I'm talking to favor now, not everybody. Favor. Is it that some of us do not know the name we use to register ourselves on this platform? Favor. What's the relevance here? Okay. Inumidu, what is the relevance here?
Relevant year of assessment is 2020. For this one is 2021.
Thank you. God bless you, Inumidu. Inumidu, do you have another name?
No, that I don't even have middle name. It's Inumidu Fashion.
You sound like someone that I know. It's fine. So this will be what? 2021 year of assessments. Okay? Now, and the examiner said we should do for first 5 years. That will mean 2021 to 1, 2, 3, 4, 5. So 2025, 2021, 2022, 2024, 2025 year of assessments. Abi? So this will be our relevance here. So what will I do? I will say, okay, what is the name of this company? Tunde Limited. Tunde Limited. Preparation of what are we preparing ourselves for? Preparation. I'm looking for someone. The person, the mother of the person contacted me sometimes ago. I don't know, maybe Feito, are you the one?
I don't think so, sir.
Okay, the mother of the person contacted me and the person already paid. I can't remember the name of the person. Please, if you are the one,
Okay.
reach out to me after the class. My number is this. That's my number. Reach out to me. So preparation of, excuse me, basis period for what are the relevant years now? 2021 to 2025 years of assessment. All its asset allocation. Asset allocation schedule. Asset allocation schedule. So I'll say tax year, basis period, and QC. Let's take it one after the other. 2021. I would have from date of commencement, which is 1 what? 1/4 to 39, 2020. 2022. Okay. Oluwanifemi. 2022 will be assessed in which manner? Which is the second year of assessment? How do you assess that tax? Oluwanifemi. That will be from what date to what date? Thank you.
Twenty 2022 will be 1/10/2020 to it will be 1/10/2020 to 30/9/2021.
Thank you. If I call you to say something and you refuse to say it, it's not a good one. If you do not know, just say, okay, say something, we'll correct you. Okay, just for you to keep quiet in class is not nice. Okay, who is telling us the next one? And I will refuse to call you guys again. If I call you and you do not answer me, I will not be calling you again. And I'm noting you, if you ask question, I will not answer. If I call you and you do not answer me. If you do not know, say you do not know. We'll move on. We explain it to you. Okay. Emmanuel, okay, man. What will
Yes,
be the
sir.
next? The next one will be what?
Okay, 2023, that will be 1st October 2021 to 30th September 2022.
Thank you. 2024 will be what? Bukola. Bukola, you're welcome to
1st
the
October
class.
2022.
Yes, who is that? What's your name?
IFOA, Oats Consulting.
Yeah, I can see. So it will be what?
1st October 10,
2022
2022
to 39.
30th 9, 2020, 2023. Yes.
Bukola, we are welcoming you to the class. You just came into the class. Welcome. Okay. The next person, Olafisayo Oluwatoyin. What will be the next one?
Okay, that will be 1st of October 2023 to 30th September 2024.
Why you do come late to the class?
Actually, I've been having issue with the network in my area. That's why I haven't been joining. So I have to go to a far place for me to join right now.
Okay, you're welcome. Sorry for the
Thank
network.
you. Thank you, sir.
All right. Okay, now that we understand the basis period, now any assets that we acquire that fall within this period, we will bring them in. Do you understand me? So let's go back to our table of acquisition. You remember, I told you any asset you acquire prior to the date of commencement will be deemed to have been acquired when?
At the date of commencement.
The date of commencement.
Thank you. You know why I want you guys to be responding to me when I'm asking you a question? So that I will know that you are following me, and at the same time, I will know that we are together. Okay? This is just like an interactive section where everybody will contribute. So that means that asset was acquired at the date of commencement. What is the name of the asset? Motor vehicle. Abi, you will introduce it in that year. Any question? Okay. We move on to the next one. The next one was acquired 1/10/2020. So where would it fall in this our basis period?
It will fall in the 2022.
2022, sir.
What is the name of the assets?
Equipment.
Equipment.
Thank you. Next. The next one was acquired 1/5/2021. Where would it fall?
2023.
We better wake up. 1/5/2022.
2022. 2022.
What is the name of the assets?
Research and development.
Next. The next asset was acquired 1/9/2022. Where would it fall?
2023.
1/9/2022. Okay, building. So that's how to allocate the assets. So we can now go and compute our capital allowance now, once we know where to introduce the assets. And thankfully, we are done that. So if that is the case, we can now compute our capital allowance. So I want to form my thing so that we can have a bigger space. I will say Sunday Limited computation of capital allowance for 2021 to 2025 years of assessment. So I'll say QC So how many assets do we have?
4.
We have 4 assets.
1, 2, 3, 4, and QC. So what's the name of the first asset?
Motor vehicle.
Motor vehicle.
Good. Initial allowance and annual allowance. So initial allowance rate for motor vehicle is 50%, annual allowance is 25%. What's the name of the next assets?
Equipment. Next asset is equipment.
What's the name of the next assets?
Research and development.
For research and development, 95% and dash. The next one,
Building.
15% and 10%. And we now have our capital allowance. So I'll close this. Rates, currency. Now the first year, which is 2021, your base was 1/4. to 39 to costs. How much do we buy motor vehicle?
20 million.
20. How much do we buy the equipment?
Equipment is 30 million.
So these are the only assets that we acquired in that year. Abi? On that acquisition, initial
Equipment is 2022 tax year.
Okay, thank you, my brother.
So only motor vehicle is what came in the first tax year.
Yeah, so 10 million.
30 million. Not
No, in the initial allowance is 10 million.
Okay, okay.
So
yes, I'm thinking of equipment.
no. So I'll bring the 10 million here. I'll now calculate my AA. My AA will be, you remember, costs minus initial allowance divided by N divided by Y over 12. Abi?
Yes, sir.
So what is the cost price?
20 million minus 10 million.
How many years will this asset use?
4
years. Multiply by how many months is in this basis period? How many months is in this basis period?
April, May, June, July, September, October.
Someone is saying 5.
5 months.
It's 8 months.
They send you come. How many months?
It's 8 months.
April,
They send you
May,
come.
July, August.
That's 6 months.
From February
It's 6
till
months.
6 months.
6 months. Why did you
6
see 8 months? They send you come on.
From February till September.
From April to September is 6 months. Where do you see February?
Oh, okay. Okay.
Are you following us? The February date was
Sorry,
when they
I get it now.
Yes, wake up, don't sleep. Collect your money.
Yes, sir.
So that is 6 over 12. Give me my answer. What is my annual allowance?
£1,250,000.
Add it together. What do you have?
11 million.
11 million.
Move on. In 2022, 110, 2020 to 39, 2021. Tax nominal value. You remember tax nominal value? Which is cost minus initial allowance minus what? Annual allowance. Give me my value. Abi? Confirm? Abi?
Yes, correct.
I want to delete this down part too. So if you have not written it, write it. So we acquired another one this year, which is equipment for 30 million. On that new acquisition, did we acquire any? Okay, we acquired research and development through this year. How much research and development? I think it's 90 million. 90 million.
Sorry, I thought R&D was 2023.
Mr. Man, share our table now. When was he acquired? See it. R&D was acquired 1/5/2021. So 1/5/2021 fall within this period. Abi,
Yes.
which is 2022.
Yes,
Isn't it?
sir.
Okay. So this will be 90 million. So we need to calculate our initial allowance. So our initial allowance for equipment, 50% of this will be what? 15 million. But for this one, 95% of this will be what? 81,000. Is it 81? No. 84,000 something. 84 million.
85,500,000.
85,500. Thank you. Add this together, what do you have? 100,500,000, right?
Yes.
So A. Now for AA, in a year where the basis period is equal to 12 months, you will not prorate your initial allowance, your annual allowance. I'm saying that again. In a year where your basis period is not up to 12 months, you will not prorate your initial allowance. So by implication, I will need to recalculate my initial allowance for motor vehicle. I will have 2,500,000. Initial allowance for this guy, 30 minus 15 million divided by 4. How much is that?
$3,750,000.
Add it together, how do you have?
$7,250,000.
What do you have?
6,250,000.
250,000. 6,250,000.
60 million. $6 million.
250,000.
50,000.
Add this together, what do you have?
$106,750,000.
106,750. 106,750.
Have you received this one? I want to clean it. Can I clean it? I'm not talking.
Yes, sir.
Yes, sir.
All right. The next one, tax renown value, 2023. What's our tax renown value?
6,250,000 as well.
6,250,000. Abi?
Yes, sir.
The second one,
11,250,000.
this one, 4.5.
4.5.
Did we acquire asset this year? Yes. Which one did we acquire?
Building.
Costs. How much is the
100
building
million.
now? 100 million. Initial allowance of the building, 15% of this. We have 15 million. Abi?
15 million. Yes, 15 million.
Annual allowance is constant, 2.5. I don't need to recalculate. 3,750,000. No annual allowance for research and development. It's only once that you grant the annual allowance on that. Okay. Meanwhile, for the building that you have just acquired, you need to calculate the annual allowance on that. So someone should give me my annual allowance for building. Don't forget, the number of years for building is 10 years.
8.5.
8.5. Thank you. So add everything together. What do you have?
$14,750.
Okay. $14,750,000. Add.
That's
29.
29,750.
Okay. 2024. Did we acquire any asset this year? No. Well, this is what? 4 million. Is it 4 million? What is this value?
3,750.
What about this guy?
7.5.
What about this guy?
4.5.
What do you call it?
4.5.
4.5. And the last one is what?
76.5.
Now, because this is the last year of use for motor vehicle, in the last year of use, your AA will be tax down value minus 10 naira. In the last year of use, write this formula down. In the last year of use, your annual allowance shall be taxed in down value of the previous year minus 10 naira. Are you done?
Yes, sir.
Good. I want to clean the formula out, that's why.
No.
I don't have space. So, if that is the case, AA for this motor vehicle, which is the last year of use, with 374,990. A for this guy is not the last year of use. Abby? No A for this guy. A for this guy is constant. I have told you, it's constant. So what do you have as your total allowance? What do you have?
Three, 7, 4.
99990.
9999990. Like this. Sorry,
No,
9 million, Abby.
it's 15 million. Wait, Abi is doing.
Correct, sir.
Oh yeah, who is giving us?
Total is 24 million, 22 for 4.
Oh, you are on your own, no. This
9.
plus this is 7 million
15
plus this.
million 99990.
Thank you.
Yes,
15,999,990. Okay. What's my 2025 now? You write the basis period. Tagging now value 10. Tagging now value 7. Tagging now value nothing. Tagging now value here is what? What do you have?
68 million.
AA, we did not acquire any other asset this year, so dash. This is the last year of use of this asset. I will have 37.
Sir, sorry, your tax written down value for research and development is it not supposed to be 4.5?
I want to be sure if you are following me. This guy, we still have 8.5. What's your total capital allowance? Ten naira, 4.5. What do you have?
The total annual allowance is 12,249,990.
What do you have here?
59.5.
So that's the end of the question. So that's the end of the question. Do you have any question for me? In our next class, we will still continue from this capital allowance. We are not done because we still have some other concepts that we need to talk about. Okay? So, pending the time, you can look at my textbook. If you have my textbook, you can look at it for more illustrative example on this capital allowance. And also the study pack that we gave to you, you can go in there and solve questions on capital allowance before the next class. Okay, that will be end for today's class. Good day to you.
Sorry, please, I wanted to ask for this note and for the if there was any material for this capital allowance.
It's in your study material now. That study material we gave you. Everything is there. It's just that I like teaching offhand, but the study material is there for you. All right. Good day to you guys.
Better.
Yeah. All right, guys. See you in my next class. Bukola, how are you?
Good evening, sir. Good afternoon, sir.
You are on your own. We greet you specially. All right. Do have a nice week ahead of you guys.